Hello, trading has closed on September 27th, 2018. My last call said this was a negative pattern, and if we confirmed it by trading under yesterday's close by a tick, it had very negative implications. Well, we gapped up. We never got the confirmation. Doesn't mean it won't happen later. Doesn't mean it isn't bearish. It just means we don't have the confirmation we need to be sure. We said the pattern had the early high, late high, tended to rally throughout the day. Well, that's the pattern. I've seen it have an A pattern before. It's not good to gap up, hit all these highs, close under all of them, even the intervening low. And it should lead to lower prices unless we invalidate it by capping and promptly taking out this high. Should lead to lower prices. As far as how much lower, here's a wall, not quite because of this consolidation, but usually gaps like this tend to fill pretty promptly, not always, and find support under this low. So even though we don't have to have a gap open tomorrow, I think it's a high likelihood, not a certainty, that we gap over this high or gap and promptly trade under this low. If we have a gap over this high, then it doesn't mean that we can't drop because tomorrow's pattern is the one with the early low. But it certainly would avoid the negative implications of gapping down. If we don't take this high out early, lower prices should print and more likely than not undercut this low. Now during the day, people who read my book know that we got a sell signal and that worked. Now when I wrote the book, I said if we traded in this bar under a certain level, that lower prices would print. And there was no need to trade over this high. I used to have a program. When the programmer wrote the program, instead of saying prices had to trade under the prior target, the prior level, he wrote the program so prices would have to close under that level. And if not, he said the move would be false and would retrace. Well, I caught the inconsistency in the programming, but his method seemed to work too. So based on the program, we should overtake this high, but I have to tell you that the occurrence of this event where we trade under a certain level but don't close under it just hasn't happened a large number of times. So I can't really have the same confidence in this number as I have on the stuff I wrote in the book, which I tested thousands of times. But based on the computer program, that's the target. If we don't gap over this, I think it's not going to work. Now the longer term pattern, we had this break, but we don't have the confirmation. And if we don't trade under this close, it's at risk of failing, but it hasn't failed yet. Failure would be trading over this high. To me, this is a clear three waves all the way. This count is a valid count, but it's not a confirmed count. And it's confirmed if we start dropping in spades. And if that doesn't happen, it's still possible to find some other way to count this. So again, one of the days when the open is going to tell this story, we don't take this out fast. Lower prices should print, ideally undercutting this low fast. Not always, but very, very often. The pattern has the early low. It doesn't mean we won't gap up first, and that's today's call.